Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and I want to give you an update as I'm trying to do periodically on adjustable rates. The reason why I want to do this, and there's going to be some videos in this series about interest rates, is the Fed is, FMOC, the Federal Open Market Committee, meets in November and have already indicated a 75 basis point increase. And even a possible 75 basis point increase in December, although there's been a little bit of news about the fact that it may not go that high. But with these rates being so high, it's very strongly affecting the real estate market, not just what I do with investments, but also with owner occupants, because when you're talking about 5% more of an interest rate than it was before they started raising the rates, then it really does impact people's ability. The difficulty in terms of finding a good adjustable rate is, the first thing is you want an arm. You want something that's fixed for a certain amount of time. At a minimum, probably about 3 years. Most of the ones that I've seen lately are about 5 or 6 arms. In other words, 5-year fix or 6-year fix, and they go adjustable after that. And then they have 1% increases that can go on after that. The problem, though, is a lot of the banks don't want to do them at this point, because essentially they don't want to give low rates for people that they know are going to refinance, because once inflation is knocked down, then rates will come down. It's always that case. Now, they're not going to go down to the pandemic levels that we saw. Those were highly unusual, but they will go down, and probably significantly, once inflation is beaten. Who knows how long, 6 months, a year? Hard to say at this point. But if you have a 5-in-1 arm, you have the ability to get past that bad news of high interest rates. But I think it's coming. For instance, I've got one right now that I think is decent, but it requires 45% down payment. Now, this might be great for somebody that's got cash, say $300,000 worth of cash, and they want to buy new construction and they want to buy it all cash. Well, 45% down will buy you 2 homes. But these are 6-in-1 arms with 30-year amortization schedules, and the interest rate is 6.5%. Well, and that's good. Now, you can do a 25% right now, though, and pay some points, which is getting your interest rate down, and I can explain that in another video. And with those points, you can get it down to 6.625%. So you're just barely off that. So what we're really looking for still in an adjustable rate is something that would be like 5.99% or something of that nature, something below 6%. Now, whether we get that or not, I don't know. We have been giving out, a lot of opportunity to people or companies that are brokers that do non-Fannie Mae loans, non-conforming loans. Just haven't seen the right thing yet. But I just want you to know we're still looking. We think it's going to be very, very important. We still want to have that good cash flow. That's what an adjustable rate mortgage does. We do have that 45% down. They're hoping their rates will come down on that. We'll keep you updated every month. We know it's coming, hopefully, before the end of the year.